Hello. In this chapter, you're going to get introduced to some of the differences in accounting in a government or nonprofit setting compared to that of a for profit business setting. Although the course that you're taking is specifically geared towards not for profit accounting, please do not glance over the information that's presented regarding a governmental settings, as there are some similarities in how you account for transactions in a government or nonprofit setting. When you are analyzing accounting transactions in a nonprofit setting, they follow the same principles in a for profit setting. So, for example, when you are thinking of an asset account, cash, in your, if you recall back to your accounting principles courses, to increase an asset account, you would debit that account. And to reduce that asset account, you would credit that account. So in nonprofit and for-profit settings, those types of principles are remain consistent. However, in a nonprofit setting, the presentation of that data do follow a slightly different path than that of a for-profit setting. And that's primarily due to different standards that are set by the standard setting boards, as you see on this slide. In a federal government setting, there's the Federal Accounting Standards Advisory Board that sets the accounting standards for federal governments entities. And then for private nonprofits, it's the Financial Accounting Standards Board, or FASB. And FASB happens to be the standard accounting standard board that sets accounting standards for for-profit businesses. So as you go out through this course, you will find that the presentation of data will be similar to a for-profit businesses, with some slight differences in presentation of the data in a nonprofit setting. Let's take a moment to understand some of the high level differences between a for profit business compared to a nonprofit organization. The first has to do with mission. In a for profit business, the ultimate aim of that business is to earn a profit and maximize shareholder value. In a nonprofit, the mission of that nonprofit is to provide some sort of mission, some sort of service to improve the society in which it operates in. So there's more of an altruistic aim here in a nonprofit setting. The forces that help guide business decision making for a for-profit business, it's the marketplace, different changes in supply and demand, economic forces that may drive a business to maybe change the prices in which they set for their products, or change how they allocate resources in production of that product. In a nonprofit setting, the governing force is a budget. The budget sets out how much the organization is authorized to spend on a certain project or mission that the nonprofit is set up for. So when you think of a for-profit business, it's revenues that help pay for expenses to generate the profit. But in a nonprofit setting, the nonprofit is looking to set up, how much it can spend, and then to help fund those approved expenses, they determine how they generate revenue to be able to fund those expenditures. In the in financial document perspective, in for-profit businesses, the annual report is something that is a very important tool. At the end of each year, a for-profit business generates an annual report to its shareholders to report on how well the business did or did not do. And in the nonprofit setting, the budget is the primary document that helps drive decision making, because it's the budget, the approved budget, that determines how much the nonprofit can spend on certain things. And when you talk about budgeting, for-profit businesses tend to develop operating budgets sometimes on a multi-year basis, the board of directors will uh, take a look out 3 to 5 years to determine kind of a strategic budget to take the business from point A to point B. However, in a nonprofit setting, although there is multi-year projects that a nonprofit may use to analyze and budget for, their primary drive is, a year over year basis. In other words, whatever is approved to be spent that year, that's kind of like the primary factor of how the nonprofit will operate during the year. That doesn't mean that the nonprofit won't engage in multi-year budgeting, because maybe they have a strategic plan of expanding their services from one geographical area to the other. And so the board of trustees may utilize multi-year planning to try to drive how do we, increase our revenues or funding to be able to open up that second center to provide our services. As stated in previous slides, a nonprofit may engage in activities that are to promote some sort of social mission that it's trying to um, promote in the area where it operates from. However, the nonprofit may engage in certain activities that are more business-like than and different from the mission that it is promoting. For example, in many church nonprofit organizations, churches may run a bookstore to raise additional revenue to generate profits to further the mission of the church and its ministry to its parishioners. And therefore, the bookstore will look and act like a for-profit business. And so the organization will need to think about, managing that business from a profitability standpoint rather than the overall church mission of tending to its church parishioners. As with any organization, whether it be a for-profit or a nonprofit, at the end of each year, each organization must prepare and circulate financial reporting, primarily financial statements at the end of each year. And the purpose of those financial reports is to provide an accounting for how the organization performed over the most recently completed operating year, also compare those actual results to budget, and also, as needed, report that same information to uh, the appropriate governmental entities. And from a federal reporting standpoint, certain nonprofit organizations that are tax exempt are required to file what's called a Form 990, which is a nonprofit's version of a tax return to report to the IRS its financial operations for the most recently completed year. Now, as mentioned in the previous slide, one of the users of financial reports that a nonprofit will generate is, the applicable governmental entities. But in this slide, there are other interested parties that will need to receive financial information based on the nonprofit's relationship. So, for example, sometimes a nonprofit may have a loan from a bank to help maybe purchase a piece of equipment or purchase a building. And so generally the nonprofit will be required to provide the financials to the bank that's providing that loan. But this slide just kind of outlines some parties that would find receiving financial reports useful. And I want to focus on the next slide in the middle, referencing donors and grantors. One of the other important constituent groups that a nonprofit should be delivering financial information to are to its donors and grantors. For a nonprofit, contributions from donors represent the clear majority of the nonprofit's funding in order to implement its social mission for which it was set up to operate. And a lot of times these donors provide donations that are restricted to or intended for a certain project or a certain purpose. And the nonprofit is required to provide information back to those donors to verify that that donor's funds were used in accordance with the instructions provided and attached to that particular donation. To see more information about this chapter, please refer to the comprehensive PowerPoint slide that is included with this week's lesson in Canvas.